Welcome to the MLO SAFE Test Study Guide. Welcome. This presentation is designed to help you prepare for the MLO SAFE Test, a key exam for mortgage loan officers. We will walk through the essential topics, tips, and strategies to ensure you're well equipped to pass the exam with confidence. Whether you are new to the industry or looking to brush up on your knowledge, this guide will provide valuable insights and resources to help you succeed. Let's dive into the core concepts and important details of the MLO SAFE Test. The Fair Housing Act, FHA, was created to stop discrimination in housing and mortgage lending. It ensures that people aren't treated unfairly based on their race, color, religion, national origin, sex, familial status, or disability. The goal is to make sure that everyone has equal access to housing opportunities and prevent discriminatory practices in the mortgage process. Some of the practices the FHA prohibits include things like blockbusting, or panic selling, where sellers are pushed to sell their property based on the fear that people from certain protected classes are moving into the neighborhood. Another practice that's banned is steering, which is when people are directed to certain areas or housing based on their protected characteristics. Redlining is also prohibited, where lenders deny services or loans in certain areas based on racial or ethnic makeup. Refusing to sell or lease a property after receiving a legitimate offer is also against the law, as is offering different terms to buyers based on their protected characteristics. Lastly, discriminatory advertising is a violation, meaning no ads can suggest a preference for certain people based on protected traits. There are some exceptions under the FHA. For example, if you're renting out a unit in your own home, the Fair Housing Act doesn't apply. Similarly, if a property is being sold privately without a broker or agent, or if it's run by a private club or organization that limits occupancy to its members, the FHA doesn't apply in those cases. However, if housing is being advertised, it must include the Fair Housing Opportunity logo and a statement about equal lender opportunities. To address issues like redlining, there are laws like the Community Reinvestment Act, CRA, and the Home Mortgage Disclosure Act, HMDA. The CRA makes sure that financial institutions are meeting the credit needs of all communities, particularly low and moderate income neighborhoods. HMDA requires public reporting on mortgage lending practices to help meet housing needs. If you feel that your rights have been violated under the FHA, you can file a complaint with the Department of Housing and Urban Development, HUD, within 1 year of the alleged violation. HUD will investigate these complaints and may take legal action if necessary. Both the FHA and the Equal Credit Opportunity Act, ECOA, have similar protections, such as banning discrimination based on race, color, religion, national origin, and sex. However, ECOA adds protections for familial status and disability. On the other hand, the FHA protects against discrimination based on marital status, age, and whether someone is receiving public assistance. The Home Mortgage Disclosure Act, HMDA, was created to track mortgage loan data to ensure fairness and prevent discrimination, like redlining or blockbusting. It helps monitor whether certain groups or areas are being unfairly treated in the mortgage lending process. Banks, savings associations, credit unions, and other lending institutions need to comply if they offer 25 closed-end loans or 500-plus open-end lines of credit. These institutions must keep a loan application register, LAR, which contains data about their loans but excludes sensitive information like loan numbers or specific dates. Reports need to be submitted by March 1 each year, with quarterly updates as well. Mortgage brokers are exempt from complying as they don't underwrite loans themselves. Institutions must keep these records for 3 years. The Gramm-Leach-Bliley Act, GLBA, focuses on consumer privacy and the security of non-public personal information, NPI, like bank accounts, credit card details, social security numbers, and loan info. It ensures financial institutions keep personal data safe. Banks, credit unions, mortgage lenders, and any company dealing with NPI need to comply. The key rules are the Safeguard Rule, which requires financial institutions to have a written security plan to protect consumer data, the Pretexting Rule, which prevents the collection of consumer info through false pretenses, and the Financial Privacy Rule, which requires institutions to disclose if they share or sell consumer info with third parties, offering an opt-out option. The Secure and Fair Enforcement for Mortgage Licensing Act, SAFE Act, was designed to enhance consumer protection and reduce fraud in the mortgage industry by setting clear standards for licensing and registering mortgage loan originators, MLOs. The National Mortgage Licensing System, NMLS, helps ensure transparency and accountability within the industry. Mortgage loan originators must meet specific requirements to be licensed under the SAFE Act, providing uniform standards across states to ensure consumers are protected from fraud. The Homeowners Protection Act, HPA, mandates the automatic termination and borrower-requested cancellation of private mortgage insurance, PMI, under specific conditions. It applies to residential mortgage loans originated on or after July 29, 1999, secured by a principal residence. PMI must be automatically terminated when the loan balance reaches 78% of the original property value, as long as the borrower is current on payments. For high-risk loans, PMI terminates earlier when the loan balance reaches 77%. Borrowers can request PMI cancellation when the loan balance reaches 80% of the original property value, provided they have a good payment history, but an appraisal is required. Lenders must provide annual disclosures informing borrowers of their right to request PMI cancellation. Government-insured loans, such as FHA and VA loans, may have different PMI cancellation rules. The Bank Secrecy Act, BSA, and Anti-Money Laundering, AML, regulations were created to prevent money laundering and ensure that illicit funds are not made to appear legitimate. Financial institutions must have an AML program to identify risks and ensure compliance. Independent testing of this program is required every 12 to 18 months by a third party. Suspicious Activity Reports, SARS, must be filed with the Financial Crimes Enforcement Network, FinCEN, within 30 days for suspicious activities, including transactions over $5,000 or potential money laundering, or transactions over $25,000 in real estate. Records must be maintained for 5 years. A Currency Transaction Report, CTR, must be filed with the IRS for any cash transaction over $10,000 within 1 day. Annual compliance training is required for all mortgage loan originators, MLOs. The FTC Red Flag Rule requires financial institutions and creditors to implement identity theft prevention programs. Institutions must develop policies and procedures to identify and address red flags of identity theft. The Mortgage Acts and Practices Rule, MAP Rule, regulated by the FTC and the Consumer Financial Protection Bureau, CFPB, governs mortgage advertising and prohibits misrepresentation and deceptive practices. False or misleading advertisements, bait-and-switch tactics, and misrepresentation are all prohibited. Advertising records must be retained for 2 years from the date the communication was made. The USA Patriot Act, enacted in 2001, requires financial institutions to verify the identity of individuals involved in loan transactions to prevent terrorism financing. Institutions must verify the identity of individuals and ensure they are not on the Office of Foreign Asset Control (OFAC) list. Required information includes a Social Security number or tax ID for U.S. citizens, and for non-U.S. citizens, a tax ID, passport, alien ID, and country of origin. 2 forms of ID must be verified to comply with the Patriot Act disclosure form. Congratulations on taking the next step toward becoming a certified mortgage loan officer. We hope this study guide has provided clarity and a solid foundation for your exam preparation. Remember, success comes with dedication and practice. Stay focused, keep reviewing, and you'll be well on your way to passing the MLO SAFE test. Good luck with your studies, and feel free to reach out if you have any further questions or need additional resources. Stay confident, and you've got this.